Three, two, one. Hello, everyone, and welcome to the Smart Investor Show, where smart investors get their up to date price analysis and market information. Well, today the markets are rallying strongly. The Dow is up some 127 points, the Nasdaq 61, and S&P 517. We're going to take a look at what the charts are saying and where this market is heading from now. We're also going to speak about independent media and independent shows like this, and why I believe it's a much better way to get your information about the markets on independent media sources rather than the mainstream media. And we're going to get into that. I'm going to speak at some length about that and why it just makes more sense for you as an investor to get information from this source. Okay, and we're going to also take a look at the US dollar, the gold market. The gold is up also pretty strongly today, and some various individual stocks. So we have a very good show for you. But let's get into the market analysis. In front of you, we see the S&P 500 rallying this morning. The market as of now is at up 17.95. And for folks who are just joining the show, the reason why I like to start with S&P 500 because it's an index of 500 stocks as opposed to the Dow. That's just 30 stocks. So the S&P 500 gives you a broader range to look at, and that's why I prefer the S&P 500. Now the S&P 500, it's coming up on its all high, and for those of you who are new to the show, also, if you'd like to get a notification when we have our shows, you can hit the subscribe button and hit the bell, and you will get on. You'll know when our shows are aired. They're aired at least 3 times a week, Monday to Friday. Okay, so looking at the price analysis of the S&P 500, we are coming up on the previous high that was made in mid-June of 24.53. And if you remember yesterday, I stated that this market could return to this previous high. This previous high here of 24.53, and it will be interesting to see if the market can eclipse that high and eke out a new high, or we could see a situation where the market can eke out a new high above 24.50, 24.52. So that's something we are going to look out. For those of you who don't know my philosophy, I believe that this market is ripe for a pullback at any minute now, and even if we get a slightly new high, it won't be sustainable, and we should see some form of a major pullback into the 2250, 2200 in the next couple of weeks. So that's what I'm forecasting for the S&P 500. Taking a look at the Dow Jones Industrial Average, we see the Dow actually. Let's look at the Dow Mini. We see the Dow racing to a new high at this 21,531 region, and that is, again, I believe is unsustainable, because over the next couple of weeks we could see a pretty significant fall in the value of the Dow. At this point in time, any news is taking the market up, and what that signifies to me is that folks are discounting bad news. So good news is sending the markets up, bad news is sending the market up, and they are essentially in a bullish euphoria, and that will come to an end soon. It always happens, and we are 9 years into this bull market, and it will correct at some point in time. The question is when. Right now the markets are still up, but that does not mean we should not be cautious. Taking a look at the Dow Jones Industrial Average, the first thing we need to look for to see if a correction is on is that it has to get down below 21,000. If we start to see it get below 21,000 and then 20,000, I believe that will be the beginning of a correction. And there's a difference between a market correction and a bear market. A market correction is a simple pullback in the market, for example. And that's why on this show we like to give examples and look at chart patterns, because you can see exactly what I'm speaking about. And if you can see what I'm speaking about, you'll become a better investor over time. That's why it's important to follow this show. Okay, so this correction, the market was in an uptrend 2012, much of 2014, and we saw into 2015 the market come down. This is what I consider a correction. The market is still in a bull market, but the market just corrected downward. This is not a bear market. We did not see a series of lower highs and lower lows. That is what I would say is a bear market, while a correction is just a mere pullback in a bull market. Now, a correction or market decline or correction can turn into a bear market. So we can get a correction that essentially the market will come down and start to break down amongst these lows. We see lower highs, lower lows. That will be the starting of a bear market. If we see a series of lower highs, lower lows coming down significantly, that is a bear market, and that's something we definitely have to keep an eye out on. But as you can see here, this market is it has actually gone parabolic, and every time we see these parabolic markets, it is a sign of trouble, and we could see a correction anytime soon. Now, that leads me to segue into the idea of the mainstream financial press, because everyone speaks about the mainstream media, and that's in terms of news media. But what about the mainstream financial press and the mainstream financial media? The Wall Street Journal, the CNBC, Bloomberg. There are numerous outlets out there that folks get their financial information from, and that mainstream financial view seeps into the general public, and that's how we get sentiment, and that's how we get popular opinion. And most folks' opinion about the markets are determined, knowingly or unknowingly. They are determined by what the mainstream financial media says. Also included in the mainstream financial media are our financial advisors and financial planners, etc. They are included in the mainstream financial media. Now, the difference between the mainstream financial media and independent sources like the Smart Investor show, we are a independent news or independent financial media outlet, and no one can determine my agenda. No one can dictate to me what stocks to highlight on the show, and what stocks I should say a good thing or a bad thing about, because it really and truly on some of these shows you can't say bad things about certain stocks, because it may cause people who are watching the show to sell the stock, and that's definitely not what they would want. And that's not what the big money donors and sponsors of some of these channels would want at all. So you can't say certain things. And that's why the independent sources like the Smart Investor show, none of that occurs. I essentially will call it as it is. So you will get a straight bare bones opinion of what is happening in the markets and what is happening in a particular stock. So no one can essentially tell me what to tell you guys. in terms of a particular stock. For example, let's just take a look at Apple. I will just give, this is Apple stock I'm going to bring up here. Uh, I would say Apple stock right now is in an uptrend. If you are holding on to it, it's probably a stock you can continue to hold on to. But if we start to see the market break down below 140 and 135, I would advise to sell. I would be selling. I would be a seller of Apple stock at that level. Now, Apple CEO cannot come and tell me anything. That is just a straight opinion. And some of these mainstream shows, they can't really tell you that. If you ever notice, watch carefully. Uh, Except on certain segments where you may have quick buy and sell decisions, no one highlights when exactly you should sell a stock. There's no uh, especially some of these larger stocks. Some of the smaller stocks, yes, they would say you should sell that stock. But take a look at some of these larger companies. How often do you hear the host to say that you should sell that particular stock? Rarely you ever hear that, and sometimes it is because of the money behind some of these stocks and the power that some of these CEOs have, and that is filtered also out into the press, made to journalists also. They get fed by some of these corporations to write good stories about a particular stock without looking at what the stock is actually doing. Is this a good buy or is it not a good buy for an investor? And as I said, at the Smart Investor, here on the Smart Investor live show, nothing like that will occur. We will tell you as it is. Apple, as I said, below 140.35, I'll be a seller of this stock. And why do I say that? Because I'm looking at the price analysis. The prices, I put faith in what the prices are saying, and put faith in what the charts are saying, because there are folks out there that advocate certain stocks, and when you look at the price of the stock, you see the stock moving down. Lower highs, lower lows. And rule number one, if our stock is making lower highs, lower lows, I am not a buyer of that stock. I need the stock to turn around first, start to make higher highs, higher lows, and then I will be investing in that particular stock. And that is what we call trend following, or following what the market is telling us. It doesn't make sense as an investor to fight the market. The market will always win. The market is stronger than us. The market has more money than you and I, and we cannot turn around. Well, I know I don't have the money to turn around a particular stock, and that is very important for investors to realize. I know folks look on things like earning per share. They will look on the company growth forecasts and the company data, etc., etc. But what I focus on is the price analysis of what the chart is telling me. And that is important because prices, if a stock is going to go up, you will see it on the chart. For example, Apple. Let's take a look at Apple. Apple started to make a series of lower highs, lower lows, and as soon as the stock went down to 115, there were folks out there advocating it as a buy. Well, I said let the markets turn around first, and let's see a series of higher highs, higher lows before you enter Apple. And this was back in 2016. So the stock actually fell to $90. And then what did we see? We started to see a series of higher highs, higher lows. And the point to get into Apple, based on my investment system, was around the 105 region. And we have seen a rally ever since. So let the market turn around first, and just don't buy a market because you say, okay, it's at a discount. And this was shown in a stock like IBB. Biotechnology stock was the darling of the early part of the rally. And just taking a look at it, you can see that the market bottomed in 2009, and investors who were following the services back then actually did fairly well, because it's rallied from $50-$60 all the way up to $400, so almost a 800% move in the value of IBB. IBB is the biotechnology ETF, exchange traded fund. Market skyrocketed up, and as soon as the market started to pull back, folks were getting in it. Folks were saying, okay, it has declined from 400 to 350, let's get in. And the market kept going down and down to 255. And the reason why I wouldn't say you should get in when it was at 350 was because we did not see a series of higher highs, higher lows. The market broke down significantly. The higher highs, higher lows here. The market broke that pattern of higher highs, higher lows, and started to see lower highs, lower lows. And anytime you see lower highs, lower lows, that is a market you should avoid until you see a turnaround situation. Now, the mainstream media will not tell you all of this. The mainstream media rarely explains this to investors, and that's why investors continuously get burnt by following what the mainstream media is advocating. So, as I said, the Smart Investor Show will make you a smarter investor by listening. It depends on your participation in the show. So if you are listening and you're liking what you're saying, like the video. Also hit subscribe so you can get notified when we upload a new video. And we will always be looking across the different financial markets. This is not just a show about stocks alone, or a show about forex alone or futures. This is a show about stocks, futures, forex, bonds, anything financial market related, that we can look at the prices on a chart and make a determination as to whether it's a good investment based on the investment system, or it is not a good investment based on the investment system. But it's very important to follow a show, independent media show like this. Okay, now back to IBB. Recently, we saw a situation where IBB started to turn around, and we saw a series of higher highs, higher lows. So if you are involved in IBB, for the record, now I consider it a hold. It generated a signal around the $290 region, and it's a hold. I would put a stop loss in at around 280, 270 at this point in time. So if you are holding on to IBB, I would continue holding this. My system is saying continue holding this, because we could see further gains up here in IBB. Taking a look at the gold market, let's just revisit gold. We see that gold is up again today. Let's look at the actual futures price of gold. Okay, so the futures price of gold is that it's up at roughly $1,220. And gold, for all of you who are wondering what the prices are saying, is in a, as I said yesterday, we saw a series of lower highs, lower lows in gold. Market was in a bear market, and during this bear market, funnily enough, many folks were saying that gold is a buy at these levels. especially at the 1500, 1550. There were numerous advertisements out there saying that gold is a buy, gold is a buy. But what was the market telling us? The market was telling us we're still in a bear market period, low highs, low lows. And rule number one again, do not buy in a bear market. When a market in a bear market, you don't buy. You wait until the market turns around first and then you buy. So we saw the series of lower highs, lower lows broken in gold, and the market has moved up, and this could be a retracement in a larger move up. Could be. It's not confirmed yet. But if gold takes out the 1350 level, 1400 level, that would be very good for gold. And I would say that would be the beginning of a longer term move to gold, where we could see gold eclipse the $5,000 level on the way to $8,000 or $9,000 in the next couple of years. Will that happen overnight? No, but it is indeed possible to see a scenario like that in the gold market. And I know gold is not very popular right now, but there are folks that are watching this market intently, because if we see a rise in gold, we are going to see tremendous moves in the value of gold stocks, and those gold stocks will make some huge returns for investors. But as I said, the in terms of gold, the timing, you just have to pay attention to what the price analysis and the prices are telling you. Do not get influenced by the mainstream media. Follow something that says, okay, the prices are saying this, prices are saying, and then when you get confirmation of the prices, and when I say the prices, higher highs, higher lows, then that's the time to pounce. You can make a lot of money on a market like gold, but you have to just play it properly. And one of the reasons why folks do not make a lot of money in some of these markets is because they don't have the patience to see it out, and that is essentially very important. Let's just take a look at some common stocks that I receive some emails about. The first one is Netflix. Netflix is still on a tear to the upside, and if I'm still holding, I still have a hold on Netflix. If Netflix starts to get below 140, I will be a seller of Netflix, because it has seen some fairly good gains since 2012, where the market, the stock was essentially down at $7, and now it's at $157. So it has had a huge rally. A lot of profits have been made in this stock, and but if we see a level below 140, 130, I will be getting out. And book your profits then. Amazon. Yesterday was Amazon Prime Day. It was Amazon reported that their revenue was up 60% on the last time they had Amazon Prime Day. I believe it was last year. I'm not sure. All that they said was it was 60% up. And for those of you who don't know, Amazon Prime Day is where they supposedly discount a lot of stuff. I know my wife got some stuff for my son, and it was at a pretty significant discount. So it's a good promotion that they have. But the markets love Amazon. Let's take a monthly look at Amazon. 2009, the stock was 2008, 2009, the stock was hovering at 34. Now it's at $1,005. So if you say $34 to 1,000, That's almost a 3,000% move in the value of Amazon. So massive gain in this stock. This has definitely been the stock of the bull market. A big name stock, and it has yielded a lot of profits. And one of the challenges as investors we face is recognizing the potential for these moves. So when I said previously that gold has the potential to move from 5,000 up to 10,000, gold is at $1,000 now, and $1,000 to $9,000 is what 900% move. That's not unprecedented in the value of gold. We have seen gold make a move like that already. So markets can make some spectacular moves. Will it make that move overnight? No, but it definitely has the potential to make these moves. So when we see some extraordinary and extravagant percentages out there, it is indeed possible. You just have to know how to play it and how to recognize these markets. And getting back, let's just take a look. I believe I said this yesterday, and I got a couple of emails to say essentially doubting that gold can hit that level. Just remember this chart already. Gold 1977. This is a monthly chart of gold. 1977 to 1979 into 1980. Gold moved from $100 up to $850. That's a 800% move. In 2001, market came back down to $250 region to just short of $2,000. So that's over a 900% move. This was done in 3 years. This took between 99 and 2011. This took about 12 years or so, but still 900% move. Gold is now at 1,000. This bottom was just above 1,000. If you do a 900% move from 1,000, where would that take you? Up to the 10,000, 9,000 region. So it is indeed possible, because I believe the inflation trade will rear its head and yield some wonderful profits for folks who take advantage of it. Back to some individual stocks that I got emails about. If you want to email me asking about a particular stock, you can go to info@smartinvestorcentral.com and send an email, and we will answer it. Nike. As you can see, Nike, I advocated, because someone asked me about Nike, roughly about the $60 region. It was a sell. Advocated getting out of that market, and it still is not. I would not say this is a buy yet. If we see the market trading above 61, 62, maybe you can look into getting back into this market, but just not yet. We want to see some of these resistance levels here. Want to see some of these resistance levels cleared first before getting involved in Nike. And I mean, this Nike stock did fairly well. Let's just take from 2009, from $10 up to $65. Pretty good run. But one of the things in making money is knowing when to buy and when to sell. So once it declined from 65 down to 60, I would have gotten out around 60, 59. And if it trades above 61 again, I would get back in. And sometimes in markets, you have to cycle in and out of of various stocks. Let's take a look again at the Kelgan group. Yesterday we looked at it that it was approaching resistance. Approaching resistance, and it's a stock that investors should keep an eye out on. Today it is down slightly, 132. Okay, but as it approaches this $140 region, you may get some sellers up in that region, and it probably would be a good thing to exit the market if you see resistance in that area. Okay, so that's essentially it for the Smart Investor market analysis show. Remember, hit subscribe. I hope you enjoyed the program. If you would like to if you would like a particular stock to be analyzed, send an email to info@smartinvestorcentral.com. That's info@smartinvestorcentral.com. We'll be off tomorrow, and we'll be back up again on Friday. So we'll see you again on Friday to wrap up what is happening for the week. Thank you for listening. My name is Beyond Dale, and I hope you have a wonderful day.